The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start the show a little differently today. I posted the chart of the New York Stock Exchange Index. This is a weekly chart. And as you can see here, folks, in the little red triangles that we have there, the three drive to a top pattern, and it's reaching up. We're within a heartbeat now of the 1.618 expansion of the whole move from when we started the COVID thing back in February to we bottomed on March the 23rd. We're making a 1.618 expansion up here with a three drive to a top on the weekly chart. So we're in for a pretty good correction, is my guess. Whether it starts today or not, I don't know. But today was unusual for one reason. We closed sharply higher on Friday. The last 4 weeks in a row, we gapped up Saturday and Monday and just kept running. Remember, we only had those 20-point corrections all for about 6 days in a row. Well, this time the market did top at 41.86, and we've had a drop of 30 handles, which is the largest correction, believe it or not, we had in a month. But that's the way it is, and it could be still going higher. We don't know. All I know is this pattern is the most significant of any that I've seen this week, because the New York Stock Exchange Index is the broadest and the fairest of all of the indices. It's not like the NASDAQ where you've got 10 stocks running it, or the S&P where you've got about 50 to 80 stocks running it, or the Dow Jones where you have about 10 stocks running it. This is really a broad indicator of what stocks are really doing. Now, we've got a very interesting chart from our good friend Rich Anderson over here that I think is interesting. It's from the showing the relationship between the Chinese stocks and also the global market, the ETFs. And as you can see here, the Chinese market has started to fade, whereas the MSCI Global is still going higher. And if you look at it really closely with that question mark up there, you can see it's also making a three drive to a top pattern. Now, this goes back only about 5 years, but you can see that we are making this 5-point reverse wave in just about everything we're seeing. And what's interesting, folks, is very few people are talking about it. There's no super bears out there. And hey, raise my hand. I'm not a super bear. I just think we're going to see one heck of a correction that's going to probably shake the tree. What we're seeing in these things like Reddit and the Twitter folks and the people that are jumping on the bandwagon, Robinhood and stuff, to me, that's nothing more than emotionalism that we saw at the .com era. The .com era was, to me, a once-in-a-generation thing because it was, it was crazy. Stocks would double if someone answered the phone and said, we have a possible sale going on. This time it's different because we do have some earnings, but we got a lot of things wrong, with the disease that's out there. And so there's just, I'm telling you that all I see is the similarities in the charts, because I'm a chartist, folks. I don't know enough about what's going on in those fundamentals to even talk on this show, so I try not to. But the charts, they don't lie. They're there for a reason, and it's the sum total of all the buyers and sellers, and that's what I'm looking at when I'm watching these things. Now, I know Bitcoin is in the news. I'm going to spend a few minutes. The only reason I'm spending time here on Bitcoin is not because I know anything about it. I just want to show you the similarities of what we're seeing in these charts. And the fact that these charts repeat over and over again, you'll notice here, you'll see the three arrows that are there. Those are equal. Those are almost equal corrections. The one in the middle is just slightly less, but the first one and the third ones are exactly equal. And the one on the far left is exactly equal. So it's nothing for this thing to drop $12,000 to $15,000. And that's exactly what we did. We've gone from 65,000 down to 52,000, 13,000. Now, if it starts going down below 48,000, yeah, then there may be a problem. And maybe this thing is a bubble. I don't know, because I don't know much. Well, let's rephrase that. I don't know anything about cryptocurrencies or blockchains other than what I hear or read. That's all I know. All I know is there's money pouring into it to the tune of trillions of dollars. So you have to respect it. And believe me, I don't know how much was flowing into the South Sea Island bubbles or the Florida land boom or the dot-com era, but, these things do go up and they do come down. Now, the thing that we've seen in stocks here in the last 2 years is just an absolute parabolic move, especially over the last 5 or 6 months, folks. We've never seen anything in a long time. Look what's happened, folks, here in the last 5 months. This is from CNBC, but it's a very interesting statistic that Tom Hugard shared with me. And this is the inflow into the stocks over the last 5 months exceed those of the prior 12 years combined into global equity funds. Now, that's global equity. That you're talking about Asia, China, Russia, Taiwan, wherever it is. But they've exceeded everything in the previous 12 years. $569 billion in the last 5 months versus $452 billion. So it's not unusual to see the market go straight up for all those things. So that's what I'm looking at. All I can tell you is we need to be aware of these things, because if you're not aware of it, you're going to be very interesting to see that some of these things are not going to work out the way you think. And remember, we do have this one chart that we got from the Elliott Wave folks about a couple months ago. You'll notice here where the numbers 13, 21, 35, 55, and 89, these are major highs and lows in the market, and those are all Fibonacci numbers, and all coming due in 2021. Now, you might go back in 3 years and say, boy, did this thing not work? Well, it probably might, and it probably may not, but what you want to do is keep it in mind, because when you lock it up with these patterns, it's very, very important. If you'll notice, let's just show the Mr. Z was kind enough to send his chart on the cryptocurrency. Let's just get it up here, of the Bitcoin, and you'll notice here we did have a 3 drive to a top pattern there at 64,900, and we've had a nice correction down to 51,300. Those are very similar. We had a nice ABCD. It missed the CD leg by just about 1,000 points, but it was certainly 1.27 of the BC leg, and so that did qualify as an ABCD pattern, and it was also a butterfly at that time, so we're to get a good correction. Now, remember, Bitcoin's been around for about 12 years. It's had 4 80% corrections, folks. I mean, 4 of them. If you remember, the last major one was at January of 2018 when we hit 19,900, and it was listed on the Chicago Mercantile Exchange. It went from 19,900 all the way down to 31,000, and from 31,000 it went to 65,000. So this is not for the faint of heart. The odds favor that this is real, because you've got real money coming in it, and it's lasted a lot longer than all the tulip bulb people that ever thought that it would. If you remember Mr. Buffett and Muriel Navini and all these other guys that are on there saying it's a tulip bulb, yes, and it looked like a tulip bulb when it went from 19,000 down to 3,000, but a real tulip bulb would have went to $300 or $30, not back to 65,000. So it certainly isn't a tulip bulb chart from looking at the way that Charles Mackey in his book. We'll be right back. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
If you're not currently using the Tas Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The Tas Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Tas understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Tas Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Tas Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a chart furnished to us by one of our friends over in the Valley of the Sun over there in Nevada, and it's basically a chart of brought out by Goldman Sachs, and it's saying that they're looking for upside potential in the euro. Now, I added that green downtrend line for a specific reason, because I wanted to bring up our own chart here so we could really see what these numbers are that we're looking at. And hold on here just a second. Where are you? Oh, don't tell me this. This is not good. Yep, here it is. Got it right here. Don't panic. Okay, here we go. This is the chart a la Fibonacci. Now, this is the same chart that the Goldman Sachs boys do, except that we've just brought in the last 6 months. We didn't go back to that low way back in January. But what we've seen now is we're seeing a very strong rally that went right up to the 61% retracement today at 120.70. We're trading at around 120.20 right now, down about 50 points from where the high was. Now, that's not the important thing. The important thing is the fact that this is in a downtrend since January. Okay, so this we know that we are in a downtrend. Now we're having a rally. Now this rally that we're looking at is almost exactly the same as the rally that we had between February 1st and March 1st, 1 month. And then since the 29th of March to where we are today, we've rallied almost the same thing. So this market is repeating itself just like it's been repeating. So the key here is that if we get above that 120.80 now, then that's going to tell us that, yes, the euro is getting ready to go. But if you look at this right here, folks, this is basically, in my opinion, you're basically look at the culmination of a two-week rally coming into this 120.70 level. So that's the way it looks like. Now, last night, and we happened to be short the British pound last night, and I said, I sent a video out as the markets opened, and the markets opened lower, the euro opened lower, the pound opened lower, and I said, okay, this is what we need to have happen because the dollar index is at a point where it could easily move. And I said, what we have to do is we have to put our stops in there to make sure that if it moves higher on Sunday night, there's something wrong and we want to stand aside. And it certainly saved us a great deal of money. We took a very small loss on that British pound to the tune of about $100 or less. But look what happened to the euro here, folks. This is over the last week, 10 days. You'll notice that the low we made last night you'll see where the market exploded from that level. It took out the previous day's low from the 16th, which was Friday. Took it out by about 10 pips, and then immediately started to go higher. I saw that, and I said, oh, boy. I said, that's a double 382 retracement, right at it's retraced basically a 2-day correction, and and the way that it went. And there was your high up there, came in around 120.70. I didn't put the whole thing in because it was too early in the morning to take a look at it. But anyway, that's what market feedback will give you, is when you see the market take out the previous day's low at a key point like the 382, then that tells you that, there's something really wrong with this, and that's where you want to protect yourself. It's all about how much money you don't lose, folks, not about how much money you make. Remember Warren Buffett's 2 favorite rules. Number 1, don't lose any money. Number 2, don't break rule number 2. Well, the only way you're going to be able to play this game is to take some risks, and the risks that you want to take are as small as you could possibly get. That's the main thing that you're looking at when you're watching here. Now, let's take a minute here and take a look at the gold market, because we are at a very interesting spot here in the gold. If you'll remember, I spent a great deal of time with this, I believe, in the newsletter, and then also last week I mentioned it. What we made now, the high that we made today up here at this right above the 1785 level, was a 382 of the move way back from November 20th, going back 7 months. And there's also, as you can see, an ABCD pattern that's formed there too. Now, if this is an ABCD pattern at the 382, you're looking at gold possibly breaking to 1,500, folks. I know it doesn't sound feasible right now, but if gold starts to weaken dramatically here, it could easily have a target of 1,590 per ounce. And I don't think that's what's going to happen, but all I do know is this high that we made today in the gold, just slightly higher than we were on Friday, is a beautiful ABCD right at a 382. Silver did not make new highs from Friday, nor did platinum, I believe. So there's some divergence in there. So that tells us that anytime we can get that gold above that 1790 level, it's probably got a pretty good chance to go higher. But right now, it looks like we are in the corrective phase of the gold market, and that's what my 2 cents are telling you. By the way, if you have any questions, call in at 877-927-6648. Mr. Bill is talking about the euro had 3 drives down before the rally. Mr. Bill, you spot it right on there, buddy, down around 117. We were actually, it was around 115 when we had a really nice one. So those patterns really do help out to see when the market's going to change. I wanted to spend just a moment about something that we all use. We don't know we use it because we're not in the building trades, but Mr. Twentyman was kind enough to send me this chart here of the lumber. And lumber has been in a historic bull market, folks. We've gone from $300 a square foot all the way up to $1,300 a square foot today. And that's a tremendous move, folks, 500% in just a matter of a year. Anybody building a house will know that lumber prices are going through the roof. If you notice the dark green dotted line here, that's basically WD Gann's 1 by 1 45-degree line, and that's something. Well, we got a caller from Niagara Falls. Michael, are you there?
Yeah, hi, Larry.
How are you? What can I do for you, my friend?
Justin Trudeau's useless federal government is having a budget in the House of Commons today at 4 p.m., and it may be rejected, triggering a election. I was just wondering if you could take a look at the Canadian dollar.
I certainly can. I always watch the Canadian dollar because we have my wife has relatives up there. If you'll give me 1 second, I'll get this thing up here. I know I have it. There we go. And it's in a real interesting spot here. To me, it looks like we're getting ready to. Well, it looks like I posted this daily, but we've got a head and shoulders pattern here in this Canadian dollar. Now, if it gets above the 80-50 level, this would be broken. But if we get below 80, it's going to tell us that this is probably a head and shoulders pattern, and we're getting ready to go lower.
Could you post it, please?
I did. I've got it. I've got it in the room. Yeah, I sure did. I think I did. Well, yeah, I'm pretty sure I did. But let's just do it again just to make sure. Yeah, there we go. And But that's it. So it's a symmetrical head and shoulders. The right shoulder is lower than the left shoulder. The time is right. You've got a little ABC in between. So I don't know. Are we trading at around 80 right now?
I see it. Yeah. No, it came up now. I see it. Yeah.
Okay, good. But that's what it looks like to me. Now,
the neckline is where, about 79?
Yes, that's correct. That is correct. Their necklines are around 79.
Okay. Very interesting. Okay. And with the markets here, with the S&P and the NASDAQ, do you foresee the start of an endless pullback? Like a nasty 74 style correction where it just keeps, like a Chinese water torture, would just keep going down and down and down.
Yeah. Yes, I do, Michael, but people want to put me on medication, so I got to be careful. We'll be right back, folks. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The gold report comes with a 30-day money-back guarantee. Go to TFNN.com and order the gold report now. Protect your buying power. Order the gold report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we were chatting with Michael up in Canada. I've known him for quite a while, nice young fellow, but he's asking, do I ever foresee a market that's going to go down for a while? And yeah, I do. But you don't get extra points, folks, for picking the high. And I don't want to do that. All I want to do is to alert you to these patterns that I'm looking at. I just posted the NYSE pattern again, and then that's the weekly, and then I posted the daily chart of the S&P showing the 3 drive to a top pattern. We're seeing them all across the board here. But, when you write a newsletter and you try to tell people what you're looking for, you don't get an extra bonus just because you pick the high. This much I know for sure. You can ask Larry Williams. He picked the absolute low on March the 23rd, and he said he virtually got no feedback on that, which is just about what you would expect. But here's the kind of trade that you'd like to have, folks. This comes from one of our folks here at TFNN. He sent this to me before it happened, but this was a chart of the Russell. I mentioned in the newsletter, on the radio show on Friday, if you're going to look to sell anything, sell the Russell because it's the weakest. And you can see here it certainly has been, but it's been in a downtrend. That arrow that you're looking at basically is a completion of a 135 pattern. We have lower tops. And now that that already made its price objective today, but it was basically as about as low as risk as you could possibly get into something. Or I think the risk was about $150, and that's the kind of trade that you're looking for. You try to not risk very much money, and if you do those are the ones that are going to be working for you. Now, if you try to pick a top, you got to have a really good reason, and actually more than one reason to do that. I can see some reasons here. The first one came today, the fact that we broke more than 30 handles. That's our biggest correction in a month, believe it or not, but that's all it's been. Now, if it's down today, and I don't know where it's going to end, of course, but if it's down today, that's going to tell us something. So in 2 days, by Wednesday, we're going to be looking at something we'll be able to tell if the market's going to correct more than 5 or 10% within a relatively good probability. Now, I know it has nothing to do with the reopening of the economy or anything like that. And believe me, they're wide open here in Tucson, Arizona. All the restaurants are open. The malls are filled. It's just amazing. It's like nothing ever happened. But we lost 3 million people, folks, out of 7.3 billion. But the lives that were hurt were a lot more than 3 million. I can promise you that. At least we see it in our neighborhood a great deal. So let's remember that it's not just the money that was lost. It was some really bad things happened to people that couldn't pay their bills and stuff like that. So that's the main thing. Now, when I was talking to you just a second ago about seeing things that are a little scary, and that one chart that that Rich Anders sent to us, showing the world index along with the Chinese index, you'll see that we're seeing some divergences here, and you see that white line there, which is the world market. That is exactly like the Dow Jones reverse point wave, the T6 pattern in Gartley's book. So that's a big one. Now, how high it can go, I don't know, but we got above 34,000 without any trouble. Now, all I'm waiting for is to give me a little market feedback to see what where the prices are. People are going to start saying, well, maybe I'll take a little bit of profit here. You can see what happened when the slightest negative news came out on Bitcoin. The market dropped, 13,000 points. But, that market trades 24 hours a day, 7 days a week. So, that's an easy one to see when stuff like that happens, and it stopped exactly where it should have. So I don't know. Those are just a few of the things that I'm looking at. One of the stocks that I'm watching, of course, is Mr. Appel. Mr. Appel, who's down by the well. Okay. You'll see the 61% retracement was 134.04. Where last I checked on Apple just a little while ago, it was 134.54. We've been here for 6 days, roughly at this 61% retracement. And if we start getting above that 137 level, that's telling me that we're probably breaking Apple out to the upside, which we could certainly do that, but it's been lagging the market so far. Today it's actually holding up better than the market, but it's a big stock because it's the most widely held all over the world, and so you really need to look at it. So those are just a couple of things that I'm watching here today. But as far as trying to pick a top, it really you don't make any extra money when you look on your equity run. It doesn't say, oh, this was the high tick or anything like that. That doesn't mean anything, folks. It's the amount of money that you don't want to lose, and that's what we're trying to do. Even when we're doing the gold, we had a tremendous run in gold on the upside, a tremendous run on the downside, far more than what happened in the stock market actually, because the margins are higher in that. But that's all we're looking at, is to try to find spots where we can buy or sell and not risk very much money, and that's what it's all about. That's what a technician should do, is to look for those particular things, because that gives you an idea of what your risk is, and that's what the whole thing is all about. Now, I did go over the lumber. I wanted to talk to you about that lumber. Let's get that up here one more time because it's important for the building trades and stuff like that. This could mean that we are actually reaching a high in these remodeling and rebuilding and all this stuff that's going on, people moving out of New York. But this is a 3-drive pattern. You can see the dark arrows pointing down. That's a 3-drive to a top pattern. The 2 lower arrows on the uptrend, the first one is an exact 382. The second one comes into a 61% retracement off of the arrow at 382, and then away we go. And this is how markets end. If you'll notice here, back in September, the market took a little bit of a correction. It went from 9,000. It went from 900 all the way down to 4,200. It dropped in half. So when these things turn, they can turn, rather dramatically. So the reasoning that they give you on TFNN and some of these, not TFNN, CNN and also CNBC, is that all these people that were living in these large cities in apartments and condos and stuff like that decided to move into the, the areas of the rural area or, subdivisions and stuff. And so they're doing a lot of remodeling. That may or may not be true. But if you just look at the chart, somebody's buying a lot of lumber. That's pretty much it. And lumber is a very, very small market, folks. It's hardly any mutual funds. Well, there are some that trade it, of course, but it's just not, heavily traded. But it's a valid market, and it's mostly through the far west, the western United States, northwest, but it's a big market, so it means something. But I'm just looking at the pattern. It's a 3-drive pattern, folks. I have not seen this many 3-drive patterns in my history of looking at these markets. I just have not seen many 3-drive to a top pattern that I'm seeing in everything. I mean, there's a lot of them. So something big is going to happen, and I hope we're going to be around. One of the things you have to worry about when you're trading like this is trader fatigue. So you've got to be ready, really, really prepared, to think properly and make sure your position sizing is correct. That's what I try to do every weekend. And when I send the newsletter out along with the videos, I try to give you an idea of what I'm thinking and about how much I have to risk to see if I'm right. And, when I'm wrong, I certainly will let you know as quick as I possibly can. But that's what it's all about, because you are going to catch some big ones, folks. I think we've proven that over the years here at TFNN. We're going to take a break. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresee Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, I posted the chart of the Canadian dollar on an hourly basis. As you can see here, the high up there at 61% retracement at 80 was hit this morning. We took out the highs of the last few days, a beautiful little butterfly up there. And then we've broken 50 points. So it's made $500 so far. So you would be in a risk-free trade on that one. And if it is, in fact, the head and shoulders on the daily, that has a very, very high probability of going down to 77. So that could be one that could be a really good move to the downside. So just looking at it, that's exactly what happened today. Well, when Michael called in, as soon as we had the break, I pulled that 60-minute up just to see what it had done, and it did exactly what we thought it was going to do. It's broken, and it looks like we're heading lower. So we'll see if it works, but sometimes they work, sometimes they don't, but when they do, they work pretty good, and that's the secret to doing some of this. Now, we got another interesting one that we've been watching for a very long time here. Let's get this up. This comes from our friends over at Stock Charts. I've also done the one in the newsletter, of course, but I wanted to send this out to you to show you how some people use moving averages and stuff like that. And believe me, here at TFNN, there's some guys here that really understand that stuff. Basil Chapman, David White, Steve Rhodes, Tom O'Brien, they understand how moving averages can help you. And this is basically showing you a short-term double bottom. And if you'll notice that the second bottom is higher than the first, that leads to an ABCD pattern. Okay, that ABCD pattern is going to come in at about, this is the ETF for the natural gas fund, but the natural gas itself, that comes in at 2.76. So the high today has been 2.7420. So somewhere between 2.76 and 2.8, $400 tolerance in there, there's probably going to be a pretty good correction because that is an ABCD. Now, the reason why I'm showing you this is if you'll go over to the December January period, you'll notice where it's making also the exact same pattern, except that it has that big washout day. The market gapped down and then closed near the high end of the range, and the next day it gapped up. Well, that's pretty much the same pattern that we had over here with the exception of that gap down, and that led to a rally from 8.7 all the way up to almost 11. So this is a very significant pattern here in the natural gas, especially whether you're long or short, because if it gets above 2.8, that would be above 10 in this ETF, which is trading at around, was it at about 9 point something right now. If it can get above 10.2, it's got a chance to really have a big move. So that double bottom, by the way, came in at an exact 786 retracement. That was that number we were looking at came in at 2.48, and now we're 30 handles higher than that pretty much. Yeah, we are 30 handles higher than that. And so we'll be watching that one very, very closely, because this has got a potential, to double or triple in price. So let's remind ourselves that you want to get in when they're really fairly priced, not chasing it on the way up, because sometimes chasing is a little more difficult than you would like to see. So that's it. One other question someone asked me about the gold market. I'll bring that chart up again here, and that is what would change my mind. And folks, you know how bullish I've been on gold for a long time, and we've been on both sides of this market the right way so far, knock on wood. Anyway, what we're going to look at here is if we can get above 1790 now, after this run we've had. Now, notice that this last run, we went up 12 days. The last run we had before that was 8 days. So this was definitely a 382 retracement of the high from November 20th when the gold hit $1,980 per ounce. Do the math yourself. Defy human nature, but that was a 382 retracement. So that tells us where we're going. We also had market feedback from silver because it didn't make a new high, and we also had market feedback from platinum, and it didn't make new highs. However, the copper has been acting extremely bullish, falling along with the stock market. Even with the stock market selling off, copper was still holding its own today. So people are still interested, in buying copper. We came off of a low at $8.97 a pound, and we're back up near the 430 level again. So these are things that Mr. Z in the room is very, very closely tuned to, and he's always helped us, with the cotton, with the copper, and many of the others too. Excuse me, folks, I need to take a small drink. The old Palo Verde trees are in bloom over here, and it's not an easy gig, believe me. Okay. Well, I'm happy to say that we only know one person that passed away so far from the COVID. She was 94 years old, the mother of one of our good friends here in Tucson, and she actually just had the flu. She had a bad cough, and they took her in the hospital, and they put her on a ventilator, and she was gone in 8 hours. So, they don't know whether she died of whatever it was. No, that was not Johnny Carson tea. Actually, Mr. Bill, when I met Johnny Carson, this was back in the 70s, he had stopped drinking. He had drank earlier in his career, but he was pretty much a teetotaler later on when we used to go to his show, and the producer lived right on our block. So we went to that show probably 20, 25 times over a 6 or 7 year period, because that was one of the things we did for entertainment, especially when it was, when we had relatives come in. Yeah, it was. Johnny Carson was certainly, fact is, on days when I'm in the middle of the night doing stuff, I'll pull up things from Johnny Carson's show. And, of course, I love the ones with Zsa Zsa Gabor and Jane Fonda and Ed Ames. I mean, those just, you cannot help but laugh because they were so funny. When he had Rodney Dangerfield on and stuff, I mean, and Robin Williams, oh my God, what great talents. Anyway, those are just a few of the things to remember here as we're going through here. Okay, Goldie Hawn, yep, they were all great. There's no question about that. And say hello to Mr. Steve Rhodes, who's in the room today. Steve, here's a perfect guy, one of the guys that's always in the top 10 of the old Timer Digest. Steve, what are you doing now that they've stopped Timer Digest? Are you subscribed to one of the other people that evaluate your work? Because it certainly should be evaluated. I mean, it's really good stuff. In fact, he's really good. And I know Basil, David White, they got a great group of people here that try to help you folks. And okay, that's pretty much it. We've got a minute to go here. Oh, someone's asking a question about one other one. Let's get it up here, and that is the heating oil. I wanted to bring this up because I think the heating oil and the crude oil are heading lower. You'll notice here we have the 135 pattern here on the weekly in the heating oil. The retracement back last week was an exact 61% retracement. So that's an important thing to look at. And, that's the main thing of watching this heat oil. And the crude oil is pretty much the same thing. In fact, it's a lot easier to see in the crude oil when you look at it on a 4-hour chart, which we will do right now. You'll be able to see that the 61% retracement hit it spot on at 6,400. 6,400, shut the front door. $64 a barrel, and we're trading it right now just pretty much where we were before, I think at 63.11. Take a break. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks, we were talking about market feedback. I brought up the S&P 15-minute chart. You can see the high that we made on Friday. We gapped down last night. We dropped down 20 handles. That was the 7th time that had happened, folks, in a row. From a week ago Sunday. So all of them have been correction. We rallied up exactly to the 61% retracement at 41.74, and we violated the 1.618 expansion on the downside. So not only has the market retraced more than 20 handles, it's broken the 1.618 level for the first time since Hector was a pup, and that dog's 26 years old. Anyway, how much is it going to break from here? I don't know, but what you want to start to do is to start to see what happens on the next pullback. Look what happened the last time we had a pullback. That was this morning. We went from 41.61 up to 41.74, so we rallied 13 points. Well, we've already rallied 13 points before we made this low. So watch for 13 14-point corrections for a while, and you're going to be able to see how the market's reacting, because all it's doing is repeating itself over and over again, just like we've seen in Bitcoin, crude oil, gold. They all repeat the same thing over and over again. Just look for that repetition. Try to find the ratios and patterns in between. Use a little bit of common sense. And, of course, use the secret tools that I've given you in our private trust sessions that we have. And if you believe that, boys and girls, I still have 2 shares of the Brooklyn Bridge. There's no secrets. It's just hard work, mental ability to stay away from trader fatigue, because when you get that, you're going to make mistakes. Mistake leads to trader error, and that leads to breaking the trader's soul, and you don't want to do that. But right now, I have started a short-term downtrend. This is 1 day down. And remember, we haven't had a day down since, that Hector was 26 then. Anyway, it's just been a while since we've had a major correction. So we'll probably get at least 100 handles on this one, but it's not going to go straight down. That's we don't know for sure, but we should get at least 100 handles on this. But before we get to 100 handles, we got to get to 50. So that's 2.5 times the 20. We'll be right back, folks. Tomorrow, 877-927-6648.